morning report, chart appraisal on Monday the 20th of July with me, Rich Perry, market analyst at Hand Tech Markets. Moving on to the big mover of the day, and that's gold. What a sell-off we saw in the Asian trading session today. Around about $45. Now, if I show you a chart of the 1 minute gold price, you can see it happened around about 1:30 in the morning. Within the space of about 5-6 minutes, we saw the gold price falling massively, just massive sell-off, and that, as I said earlier, that sort of came on the suggestion that China were not building up reserves of gold as quickly as the market had been anticipating. But I'm reading subsequently to that, interestingly enough, that Chinese press are reporting that the PBOC still does have space to see further gold reserves rising. So I don't know whether that's going to create a bit of stability in this near term. I think it's not. I mean, you could argue it's a technical sell-off, yes, because you've broken two massive support levels. 31.85 being the latest one. That 31.85 was the massive November low. Big November low, that is. And that's now taking us to levels not seen since March, April 2010. Way back in the middle of that bull run. So that's what we've seen. But it's sort of unwinding slightly in this European session. Look at the that was the hourly candle, obviously a massive hourly down negative candle, but we've sort of retraced much of that now, unwinding some of it. You've sort of left an interim support, obviously. Okay, the low of that candle 108.88, and the subsequent level of support is coming in at 114.85. But it is obviously trying to settle down, and be interesting to see how this one goes. But certainly, it looks like rallies. There's still a chance to sell on this gold price. It'd be interesting to see if this is a blow-off sell, blow-off bottom, in the fact that that's the sort of nadir of the selling pressure. Obviously, it's been accelerating throughout the week, and obviously culminating in this big spike lower. So that is something that maybe we need to sort of assess in the coming days and just sort of take a step back, because obviously when you have a sharp decline like that and then you get a big rebound, the market still needs to settle down a bit, and that's obviously what it's doing today. I mean, in terms of the RSI, it's back at 21, which is obviously very oversold, but it doesn't necessarily mean to say it can't go further. I mean, look at what happened in November when it hit that low. Again, that was 20. So maybe there is historic sort of precedent for it to come back to these sort of levels and then start to find support. So it'll be very interesting to see how this one plays out in the coming days. It might be a bit of a risky one near term, because obviously it is very volatile, and spiking around still and trying to find a new level. But obviously the big overhead resistance now comes in at 1131.85. That big old support becomes new resistance. So interesting to see how the gold price reacts to that. If it quickly unwinds and pushes back above that, then that'll be a sort of indication that the selling pressure may well have abated then, and it could start to sort of unwind some of that move. So it's a difficult one to know how to play immediately, because obviously it's still trying to find its feet. But there is some unwinding going on at the moment, and it's left some support near term at 1,104.85. So I wish you good luck in your trading on gold today, and I will speak to you again tomorrow. Thank you.